Right.
I've been warning about this Disney story for a couple of years. The stock now back to where it was in 2014. And one way to interpret that is, yes, they have a streaming business, but is that streaming business actually going to create more value than the value being lost on the traditional business? That's really the open question. And what you're seeing here is something for the first time, I think, that the market is not reacting to the headline subscriber number of Disney, which is usually what happens here. And having said that, let's give Disney some credit. The sub numbers were actually pretty good. They did much better than Netflix did in terms of domestic subscribers in the quarter. They weren't reliant on not very valuable India subs. They did add 7 million or more valuable international subs. They're bundling between Hulu, Disney Plus, and ESPN Plus, working pretty well. But what wasn't working is key to really creating value in the business, and that is pricing. Revenue for streaming was actually down, and the issue for all these streaming services is they got to get pricing up to much more meaningful levels if these are going to be really value-enhancing assets. And pricing for the second quarter in a row for Disney Plus, both domestic and international, was down. Hulu pricing was down, and they got some price increases coming, some substantial ones. But my guess is in an inflationary, potentially recessionary environment, passing on those price increases is also going to get in the way of subscriber growth. So some real challenges there.
$8 billion in total losses. So a rosy picture about 2024. Disney Plus going to be profitable in 2024 because, well, let's see, we'll be able to raise prices on subscription in a recession. Or if we don't do that, we'll do ad-supported in a recession where no one's buying ads. I mean, how much confidence do you have that either one of those things get to the level they need to be profitable in 2024? If the Fed keeps raising and, you know, advertising hard is harder and streaming is just too crowded and there's too many options.
Well, I don't think they have that much confidence. They had a major caveat in their earnings release, which said they hope to be profitable in 2024, assuming no major changes in the economic environment. Right. I think we all see major economic changes in the environment. The thing about advertising that just perplexes the hell out of me, and I've been pointing to this now for 4 straight quarters, it doesn't get any focus, and I don't understand why. Disney through Hulu has been the leader in advertising on a premium streaming service. Netflix is now getting into the act. HBO is getting into the act. There's going to be much more of this premium advertising tier offering for other streaming services. Yet for the 4 quarters now in a row, Hulu advertising revenue per subscriber is down. They don't explain it. I can't explain it. If it's been the leader in this, and it's actually for 4 quarters in a row, per subscriber ad revenue is down for Hulu, what does that portend for the rest of the industry, as you say, Joe, now that we're entering into a recessionary environment? So that's a real puzzle for me beyond the pricing on the services themselves.